All right, so thinking about investing in Roku, huh? Smart move. Doing some research first. Um, Seems like everyone's streaming these days, but is Roku really the future of TV? We're going to take a deep dive into a report on their financials. It's kind of like we're about to give Roku a financial x-ray.
Yeah, exactly. We're going to unpack their current financial picture, explore the potential risks and rewards, and by the time we're done, you'll have a much clearer picture of what's driving this company.
Okay, so let's jump in. First things first, this report digs into Roku's financial stability. What stood out to you? Are they in good shape?
Well, they've got strong liquidity, for sure. Their current ratio is over 2.5, which is well above the industry average. Basically means they've got plenty of cash on hand to cover their short-term debts.
So no immediate danger of them going broke, which is always a good sign. But here's the thing that caught my eye. The report says they're not actually turning a profit. How does that work if they're so financially stable?
Yeah, it's interesting, right? They're choosing to prioritize growth over profit right now. They're pouring money back into the business to expand, which is why you see a net loss on their books.
Ah, so it's like they're building the foundation for a massive skyscraper. They might not be renting out any floors yet, but they're betting big on a future skyline dominated by Roku.
Exactly. And it's worth noting that they are generating positive EBITDA. That means their core operations are bringing in cash even before you account for things like interest and taxes.
Okay, so positive EBITDA, that's a good sign. But it still seems like a risky move to delay profitability for so long, especially in such a competitive market. What are investors saying about this strategy?
Well, their price to sales ratio is pretty high, meaning investors are willing to pay a premium for Roku stock based on their expected future growth.
So they're basically buying into this idea of Roku becoming a dominant player in the streaming world. It's like investing in a promising startup. You're not just paying for what it is now, but for what you believe it could become. But doesn't that make it a riskier investment?
It does. Their enterprise value multiples, especially EBITDA, are sky high, which reflects the market's confidence in their future earnings potential, but it also means there's a lot of pressure on them to deliver on those expectations.
And the report also mentions something called short interest. What exactly does that mean?
It means some investors are betting against Roku, believing that the stock price is going to go down. It's not always a red flag, but it's definitely something to keep in mind.
It seems like a lot of people are both excited about and wary of Roku's potential. Their stock price has been on a wild ride this year, hasn't it?
Absolutely. Their beta is over 2, which is double the market average for volatility. So big gains are possible, but so are big losses. It's definitely a more volatile stock than, say, a well-established blue chip company.
Okay, so we've got this picture of a company with solid financials but no profits yet, a growth-focused strategy that's exciting some investors while making others nervous, and a stock price that's as unpredictable as a roller coaster. It's a lot to unpack. Where do we go from here? What else is important to know about Roku's potential?
Well, I think the next step is to take a closer look at their competitive landscape, especially considering those giants like Amazon and Google they're up against.
All right, let's dive into that. What are Roku's strengths and weaknesses when compared to those behemoths? So we were just talking about how Roku's trying to carve out its space in this streaming world. But they're facing some seriously stiff competition, right? Especially from those giants like Amazon and Google.
Right. And it's not even just about be a streaming platform anymore. The real battle is to become like the central hub for your entire home entertainment experience.
And Amazon and Google already have a massive head start when it comes to building those kinds of ecosystems. Don't they? I mean, just think about how many people use Amazon Prime or have a Google account.
Exactly. They've got this built-in audience for their streaming services that dwarfs Roku's user base. It's a significant advantage for sure.
It's like trying to open a bakery next door to a place giving away free cupcakes. You know what I mean?
Yeah, it's a tough position to be in for sure. And it's not even just the sheer number of users they have, it's also the depth of data they collect. Amazon and Google know what people are watching, buying, searching for online, and that allows them to create these incredibly targeted recommendations and advertising.
So how can Roku even hope to compete with that level of personalization and data-driven marketing? What are their strengths in this fight?
Well, one of Roku's biggest strengths is their platform agnostic approach. They're not trying to push their own content exclusively. They're happy to give users access to streaming services from all the major providers, including Amazon Prime Video and YouTube.
So rather than trying to control the entire streaming universe, they're positioning themselves as like the Switzerland of streaming neutral ground where everyone's welcome. Is that a sustainable strategy in the long run?
That's a great question. It definitely appeals to consumers who want flexibility and choice without being locked into a single ecosystem, right? They can pick and choose the services they want all in one place. But whether that's enough to hold off the giants remains to be seen.
Convenience and choice are definitely appealing, but so is having a seamless experience across all your devices. And those giants have a big edge when it comes to integrating their streaming services with their other products and services.
That's true. But Roku has this history of innovation. Remember, they were one of the pioneers of streaming sticks and boxes. They've been constantly improving their user interface and adding new features. They're not just sitting back and letting the competition pass them by.
They've also dipped their toes into original content production, haven't they?
They have, but it's still early days. It's too soon to say whether they can produce those must-watch shows and movies that drive subscriber growth the way Netflix and others have. It's a very expensive and risky game to play.
So it sounds like Roku's facing a classic David versus Goliath situation. They've got some clever strategies and a history of innovation, but they're up against some seriously powerful competitors with massive resources. What does the report say about their chances of success?
Well, the report highlights this one crucial factor: consistent profitability. That's the key to long-term survival, especially for a growth company like Roku. They need to prove that they can not only attract users, but also turn those users into sustainable revenue streams.
That makes sense. User growth is great, but if you can't make money from those users, it's not a sustainable business model.
Exactly. And that's where things get really interesting when we start to think about the future of streaming and the role Roku might play.
Okay, I'm intrigued. What are we missing here? What's the bigger picture?
Well, streaming is just one piece of a much larger puzzle. We're in the midst of this massive shift in how people consume entertainment. Think about it. We're moving away from traditional cable bundles and scheduled programming. People want more control, more choice, more personalized experiences.
And you're suggesting that Roku could be at the forefront of this shift, even with those giants breathing down their necks?
That's the question I want to leave you with. What if Roku's success isn't just about being a streaming platform, but about becoming like the ultimate gateway to the future of entertainment, the company that truly understands what viewers want and can deliver it seamlessly across all devices?
So it's not just about the financials or the competition, it's about understanding this bigger picture of how we consume content and how that's changing.
Precisely, and that's something no financial report can fully capture. It's about vision and adaptability.
Okay, I'm officially hooked on this idea, but we're running out of time for this deep dive. Where do we go from here?
Well, next time, let's bring it all down to earth and talk about what this means for someone actually considering investing in Roku. We'll explore those key factors to think about before making a decision.
Sounds good to me. Join us for part 3, where we'll explore how to assess those risks and rewards and make an informed choice about whether Roku is the right investment for you. Okay, so we're back for the final part of our deep dive into Roku. We've covered a lot of ground, from their financial health to the competitive landscape, and we even touched on the future of entertainment itself.
Yeah, definitely. We've really tried to give you a 360-degree view of this company.
Exactly. Now let me get down to brass tacks. What does all this mean for you, the listener, who's trying to figure out if Roku deserves a spot in your investment portfolio?
Well, I think first and foremost, you really have to think about your own investment style and risk tolerance. Are you comfortable with a company that's prioritizing growth over those short-term profits?
Because as we've been talking about, Roku is that classic growth stock. They're making these big bets on the future of streaming, which means there's potential for those significant gains, but also the possibility of losses if those bets don't pay off.
Exactly. So if you're someone who prefers a more conservative approach, a company with a long track record of those steady dividends, Roku might not be the best fit for you.
But if you're willing to embrace a bit more risk and you believe in that long-term potential of the streaming market, then Roku could be a very interesting addition to your portfolio.
Right. And another crucial factor is your time horizon. Are you looking for those quick gains, or are you investing for the long haul?
Because with a company like Roku, you need to be prepared for some ups and downs along the way. Their stock price has been pretty volatile, and that's likely to continue as they navigate this rapidly evolving industry.
Yeah, and it's important to remember that those short-term fluctuations in the market shouldn't dictate your investment decisions. If you truly believe in a company's long-term prospects, you need to kind of ride out those waves and stay focused on the fundamentals.
Okay, so we've talked about risk tolerance and time horizon. What other factors should investors be considering? What steps can they take to make an informed decision about Roku?
Well beyond what we've already talked about today, it's always wise to do your own independent research. Don't just rely on what you hear from us or read in a single report.
Oh, definitely. This deep dive is just a starting point. Dig deeper, read Roku's financial statements, follow industry news, look at analyst reports. There's a wealth of information out there.
Right. It's about becoming as informed as possible so you can make a decision that aligns with your own investment goals and, your level of comfort with risk.
And don't hesitate to seek out advice from a financial professional if you need it. They can help you assess your overall financial situation and make sure an investment in Roku, or any company for that matter, fits into your broader strategy.
Yeah, it's always good to have a second opinion, especially when it comes to something as important as your financial future.
So to wrap this all up, investing in Roku is ultimately a bet on the future of streaming and the role they'll play in it. They have a lot going for them, a strong user base, a history of innovation, and this platform-agnostic approach that appeals to a wide range of consumers. But they're also facing this intense competition from some of the biggest tech giants in the world.
And their success hinges on their ability to navigate this complex landscape, consistently grow their user base, and ultimately achieve profitability. It's a high-stakes game with a lot of unknowns.
Yeah, we've given you the information to start your own deep dive into Roku. Now it's up to you to weigh the risk and rewards. Do your due diligence and decide if it's the right investment for you.
And remember, no matter what you decide, the most important thing is to be an informed investor. Do your research, be honest with yourself about your risk tolerance, and make choices that align with your individual goals. There's no guaranteed path to success in the stock market, but knowledge and careful consideration are your best allies.
Well said. It's been a fascinating deep dive, and we hope you found it valuable.
Thanks for joining us. Until next time, happy investing.